Good morning. It's Harvey Jackson from Producer Profit. Just going to get through a few stories. Of course, the trade and tariffs are the top of all stories, but just how people are reacting to it, and the world reacting to it as well. So China's here to raise tariffs to 84%. Which is pretty high, but the U.S. has actually already got it at 104 on the other way. So we'll have to see how well these guys can stick to their guns as well. All I can say is don't doubt that this fight could go on a little bit. I don't know if there's any scheduled sit-down meetings that they're going to have yet. So here's a story that was out before some of these other ones, but they're basically saying that they're going to be not canceling the orders or washing them out or whatever we want to call it. But I'm going to put maybe still some doubt on this article that there's probably going to be some washout of orders, especially what they're quoting here is that there's 3 million metric tons of U.S. beans for April, May, and there's tariffs on them. So and there's also early March China imposed a 10% just in the story here, and now it's up to 34. Which is like 44% tariffs. I don't know if the Chinese importers are going to pay that, honestly, especially when they can get the Brazilian beans. But that's my bias, I guess, because we've seen washout of orders in the past and expect to see it again. So this is a little bit different article. This is about the tariffs that they're going to put on anything but the U.S. made chips. And what I want to point out is the Japan, South Korea may shift beans away because just the extra cost to be able to buy the beans because the availability of other ships other than the Chinese made ships is minimal. So they're looking for other sources. This could help Canada and other countries that need to buy wheat and other products. So wheat and corn. So they can go somewhere else. China calls for trade talks, but I don't know if this has actually happened yet. So here China's talking about that they've been pretty loyal and they're supporter of globalization, and they're producing U.S. made products like Apple and Tesla's, and they honored the phase 1 trade deal, blah 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 blah. Anyway, we'll see if there's actually going to be a scheduled sit down, and here we are. We're the agriculture chief says that new deals may be struck over tariffs by the end of the week. There's some optimism. Is it going to be with the biggest trade partner? I don't know. It's not as transparent on some of the articles that we saw, and that's for sure. Oils and metals are falling apart here too, as far as price. Maybe this is one way that Trump drives down the price in the world or inflation, but he needs to keep his people able to get these products that they may need from these other countries as well that have the tariffs. So wheat is on the rise, and I was talking to a few clients, and during recessions, food products like a staple of wheat is usually one of the places where money goes to, and the consumer buys as well. If they can't go to the most expensive food, like buying at restaurants and stuff like that, they're actually making it themselves. And the focus of saving or spending money on goods that they don't absolutely need, but food and shelter are definitely the two that they do need. Palm is falling apart, following the other veg oils, but we'll have a look at it. So you can see that basically the canolas are down, and that's talking European canola as well. Your soybean oil is down, and your wheats are up. So that's the basics that I've got there right now. So if we have a look at canola, you can see that it kind of consolidated a little bit, but it's still in this upward trend. Pretty nice little trend, and that's on the May month. So, but you can also see that we're trading pretty high on the slow stochastics, and it's if there's going to be a crossover, it's probably a sell, but it still looks like we're going to continue this momentum for some time, or at least it feels that at the moment. And here is your July contract, and it's trading in that momentum as well. There's a take profit up here at 698 is our area for the July canola. Even if you wanted to get in now, look for maybe a softer spot as far as market and then just look at getting in. Here's your November contract. Still looking at probably pricing for new crop because there's a little bit of a price differential from your July to there, but look at still selling into the future if we get a chance here when we make some of these values back to some of these values that we double topped on, probably place to make some more sales. Here's European rapeseed. So it's kind of consolidating to a little bit lower on this, if you're going to call this a pendant, because it actually probably would be a pendant or a flag formation, but we'll have to see if it's going to break out one way or the other, because it's usually the length of your flagpole, the distance that it would move. So it could actually move that direction as well, down. But it's a formation that it's hard to. I don't know what direction, but it sure feels like it's going to go in that direction. So Canadian canola is $156, less expensive than European canola on the front month. And there's going to be some confusion there at some point here too, because they're both trading May, but then they go to August on European, which will be only new crop. There is no old crop left once they get through the May, because they are winter crops primarily as well. Soybean oil. This week has not been a good week on soybean oil, and yet you saw where it went, and it was trading pretty high values there. Palm oil fell apart. So this is your crude, and it's down to $55 a barrel on the front month, and you can see this exact same thing on the diesel. That's a pretty cheap value, and how long is it going to stay here? I don't anticipate it staying here for very long. Profitability of producers of this won't stay there for very long. And I wish I could say the same thing on egg products, but crude oil or the oil industry definitely has a little bit more weight on it. But soybeans themselves, a little bit of recovery after the big drop that it had a few days back. Canadian dollar, so we had some length in there, but we're chopping around at right on that longer term upward trend. Like you see the breakout here, and there's 3 on this chart. Let's have a look at wheat. Wheat's had 3 days of up. It doesn't feel like we're up by much, but would like to get back up into these values up in here, the 660s, 680s kind of a range. And you need to get above this blue line that I have left on here to change trends as well. So that's another thing that I'll leave in there. But here's your Kansas. It's on the way up a little wee bit as well. It still feels a lot closer to the bottom. But when you look at the Chicago, it did make new lows, and it's if we can get above that short-term moving average or 10-day moving average, that would actually be supportive for Chicago wheat. Here's your Matif, still struggling on the lower end there as well. But corn, if we can get above some of these values here, just let's call it 10 cents higher or 5 cents higher, we could be breaking ourselves out of this range. And that's all I have for you. So April 10th, we're going to have a crop production, and we do have some estimates. I just forgot to pull that. I'll include it tomorrow.